Insurance law. Insurance is very useful for companies engaged in the tourism industry because there are many kinds of risks in enterprises where investment oftentimes is quite substantial.
A contract of insurance is an agreement whereby one undertakes for a consideration to indemnify another against loss, damage, or liability arising from an unknown or contingent event. Insurance is very useful for companies engaged in the tourism industry because there are many kinds of risk in enterprises where investments oftentimes is quite substantial. These are the essential elements of an insurance contract. We have the insurable interest, existence of risk, assumption of such risk by the insurer, said assumption being part of a general scheme to distribute actual losses among those bearing similar risk, and payment of premium. We have the characteristic of an insurance contract, and these are the aleatory. This contract is one where the obligations depend upon the occurrence of an uncertain event or certain to happen but an indeterminate time. Next, we have the contract of indemnity. This is an exchange of value for value, particularly in property insurance. Next, we have the onerous. It has a valuable given consideration given. Example, the payment of premium. Next is the bilateral. The both parties are bound to do something. And lastly, we have the formal. It is a policy required to be issued and the premium must be paid. There are parties in an insurance contract, and these are the insurer, a person or corporation duly authorized to transact an insurance business. Next is the insured, is a person with an insurable interest who stands to benefit from a policy of insurance. It is strict sense. The insured party is the owner of a purchaser, the policy even though benefit of the insurance may occur to someone else. And lastly, the beneficiary. It is a person designated by the terms of the policy to receive the proceeds of the insurance policy upon the happening of the event insured against. Insurance contracts may refer to the following. First, we have the life insurance, an insurance on human lives and insurance appertaining thereto or connected therewith. Next, fire insurance, which includes loss by fire, lightning, tornado, and other allied risks. These risks are covered by the extension to fire insurance policies or under separate policies. Next, we have the marine insurance, a contract whereby one for consideration agrees to indemnify another for loss or damage on a certain interest subject to marine risk by certain perils of the sea or specified casualties during a voyage or fixed period. And lastly, we have the personal accident insurance, which provides precautionary compensation for expenses or losses of income brought about by death or bodily injury arising from violent external, visible, and accidental means.
An insurance interest is that relationship with the person or thing that will support the issuance of an insurance policy. A person is usually regarded as having an insurable interest in the subject matter insured when he will derive pecuniary benefit or advantage from its preservation or will suffer pecuniary loss or damage from its destruction. Insurable interest in property should exist not only on the date of execution of the contract of insurance, but on the date of the occurrence of the risk insured against. On the other hand, insurable interest in the life and health of a person insured must exist when an insurance takes effect, but need not exist thereafter, or when the loss occurs. So now let's proceed to the beneficiaries. According to the Insurance Code in Section 18, no contract or policy of insurance on property shall be enforceable except for the benefit of some person having an insurable interest in the property insured. And in Section 19, an interest in property insured must exist when the insurance takes effect and when the loss occurs, but need not exist in the meantime. And interest in the life or health of a person insured must exist when the insurance takes effect, but need not exist thereafter or when the loss occurs. A person cannot lawfully procure insurance on the life of another in whose life has no insurable interest. Hence, the assured must have an interest to preserve the life to be insured in spite of the insurance. With respect to insurance on property, it is imperative that the beneficiary is a person having an insurable interest in the property insured. However, an interest in property insured must exist when the insurance takes effect and when the loss occurs. Marine insurance. The law states in Section 99 marine insurance includes insurance against loss of or damage to vessels, craft, aircraft, goods, cargoes, merchandise, profits, money, securities, valuable papers, and all other kinds of property and interests therein, in respect to, appertaining to, or in connection with any and all risks of perils of navigation, transit, or transportation, or while being assembled, packed, crated, compressed, or similarly prepared for shipment, or while waiting shipment, or during any delays, storage, transshipment, or reshipment incident thereto, including war risks, marine builders' risk, and all personal property floaters' risks. Marine protection and indemnity insurance, meaning insurance against or against legal liability of the insured for loss, damage, or expense incident to ownership, operation, chartering, maintenance, use, repair, or construction of any vessel, craft, or instrumentality in use in ocean or in land waterways, including liability of the insured for personal injury, illness, or death, or loss of or damage to the property of another person. The phrase perils of the sea or perils of navigation includes only those casualties due to the unusual violence or extraordinary action of wind and wave, or to the other extraordinary causes connected with navigation. A loss which, in the ordinary course of events, results, first, from the natural and inevitable action of the sea, second, from the ordinary wear and tear of the ship, or third, from the negligent failure of the ship owner to provide the vessel with proper equipment to convey the cargo under ordinary conditions, is not a peril of the sea. Such a loss is rather due to what is called as perils of the ship. In such a case, the insurer does not undertake to insure against perils of the ship. Fire insurance is an insurance that covers property such as home, shop, or other fixed asset protection against fire, burn, or etc. The law states in Section 167, fire insurance shall include insurance against loss by the fire, lightning, windstorm, tornado, or earthquake, and other allied risks when such risks are covered by extension of fire insurance policies or under separate policies. Fire insurance is essentially a contract of indemnity. In this insurance, only a hostile and not a friendly fire is insured against. Under an open policy, the measure of indemnity is the actual loss sustained, and the burden is upon the insured to establish the amount of such loss. Under a valued policy of fire insurance, the valuation in the policy is conclusive between the parties.
Compulsory Motor Vehicles Liability Insurance. In Section 373, motor vehicle is any vehicle as defined in Section 3, Paragraph A of Republic Act Number 4136, known as Land Transportation and Traffic Code. So before applying the registration of motor vehicle, the land transportation operator or owner must secure a compulsory motor vehicle liability insurance or the third-party liability insurance or TPL accredited by the insurance commissioner. The passenger is any fare-paying person being transported and conveyed in and by a motor vehicle for transportation of passengers for compensation, including persons expressly authorized by law, the vehicle operator or his agents to ride without fare. Third party is any person other than a passenger, as defined in this section, and shall also exclude a member of the household or a member of the family within the second degree of affinity of a motor vehicle owner or land transportation operator, as likewise defined herein, or his employee, in respect to death or bodily injury arising out of and in the course of employment. Land transportation operator means the owner or owners of motor vehicles for transportation of passengers for compensation, including school buses. In Section 374 states, it shall be unlawful for any land transportation operator to operate the same in the public highways unless there is enforced in relation thereto a policy of insurance or guarantee in cash or surety bond issued in accordance with the provisions of this chapter indemnify the death, body injury, and damage of property of the third party or passenger, as any case may be arising from the use thereof. Insurance policy or policy refers to a contract of insurance against passenger and third-party liability for death and bodily injuries arising from motor vehicle accidents. It is amended by the PD 1814. In Section 377, a motor vehicle shall, before applying for registration or renewal of registration of any motor vehicle, at his option, either secure an insurance policy by an insurance company authorized by Commissioner, or make a cash deposit in such amount as herein required as limit of liability for purposes specified in Section 374. War risk insurance is an insurance covering damage caused by acts of war. It includes the hijacking and related perils. Insurers have intended to withdraw liability for weapons of mass destruction, a subset of war insurance risk. So WMD includes radioactive contamination or dirty bombs, electromagnetic pulse devices, chemical or biological weapons. In most jurisdictions, including the European Union, airlines are required by the law to have liability insurance, including coverage for WMDs. Aircraft lease agreements also require coverage of war risk insurance. Since the use of WMDs is directed against states, the ultimate responsibility for security of citizens rests with states.